to do was engage those stewards of institutional capital, those asset managers, asset allocators. That is the slice of the pie that we wanted to go after, because we were very conscious of the monumental task that was before us. I mean, there are two guys, Homi Karas and John MacArthur of Brookings Institution, that estimate, and I mean this is a rough estimate, but it gives you a sense of the order of magnitude. They estimate that it will take between $5 and $7 trillion, that's trillion with a T, per annum to finance implementation of the SDGs. Right? And so we were like, okay, that's a tall order. But we know at the same time that there is a lot of money there that is probably parked on the sidelines. There is for some time now, there's been in excess of $300 trillion of financial assets that exist. And when you look at the amount of those assets that are commandeered by institutional capital, that again is just around $85 trillion. So we know there's a lot of money there. And when you're talking about institutional funds, you're talking about pension funds, insurance companies, sovereign wealth funds. These are institutions that by their nature have long-dated liabilities. So you would assume, incorrectly, but you would assume that because they have long-dated liabilities, these are the perfect sort of companies and institutions to invest in the sort of long-term value-creating assets that we feel are necessary in order to meet our obligations under the SDGs, but the money is just not going there. And we wanted to know why. What are the impediments? So one of the first companies that we invited to speak with us, I remember her right now, her name, well, I don't want to say her name, but anyway, it was somebody very high up at one of the largest investment management firms in this country. And we asked her, tell me what you're doing in terms of investing in real assets, and not in the developed world, in the developing world. And she pointed to Mexico. And immediately some of the group members, the ambassadors from some of the countries, say in sub-Saharan Africa, I know my colleague from Mali put up his hand and said, okay, many of us are not emerging economies. So when you think about developing countries, they are developing countries and they're developing countries. Fine, you're investing in Mexico. But how can we in Mali attract some of that capital? And it's a completely different conversation when you're speaking to somebody who is an LDC, which relies inordinately, and you can understand why, on overseas development assistance. And you're speaking to somebody in Chile or Turkey or Mexico. And she said, well, she's just not seeing the deal flow in some of these countries. Now, I understand what she means by that, and it does not mean that there's a lack of investment opportunity in these countries. It just means that it is not structured properly, it is not packaged in the right way, and a potential investor can look at it and just make a calculation in terms of the risk return or projected cash flows or NPV or whatever it is that you guys look at when you're assessing risk and return. It's just not, I mean, there's a lack of institutional capacity to actually structure it in that way. And so that is one of the things that we're doing in terms of the group of friends. It's not just a pedagogical exercise where it's didactic and we're just having people and it's a nice conversation and then they leave and we feel edified. No, we decided that we had to have a more practical accompaniment to what we're doing with respect to the conversations with the private sector. And so with the help of the Danish government, they have completely underwritten an exercise. It's a workshop that we're doing. We brought on board Rockefeller Brothers. We have their Pocantica estate. We go up there for 2-3 days, and we bring a cohort of our members from the developing world, from capitals, not from here in New York. And we just said to them, listen, bring us a portfolio of public investment projects that you're looking financing for. And it has to be a minimum of $200 million. And we assemble about 30 private sector people in a room from all over the stratosphere. And it's really like a Shark Tank format. We just say to them, present your investment proposal. And they're interrogated brutally sometimes, but after a series of these sorts of retreats, it really helps them in terms of how they structure their projects and how they think about different types of risks that they never contemplated before. And it gets them up to speed. I hear you, and I also have to leave. So that's a little piece of what we're doing in the group of friends. So thank you very much.
Excellent. Thank you, Ambassador. Thank you for stopping by. We know you're very busy. We will miss you in the panel, but thanks for sharing all your insights with us. Thank you. We are going to get our next panel to come to the stage. So, Denise, you're going to take over from me to moderate this panel. We have Emmanuel Faber, you're the Chief Executive Officer. Come here, Denise. You can come here. Yeah. Chief Executive Officer of Danone, and you have the largest B Corp certified company in the world, and you're also a participant of our action platform on reporting. Saori Deboer, you are member of the board of executive directors at BASF. You're also in the action platform on reporting for the SDGs. And Scott Matter, Chief Investment Officer, U.S. Core Strategies at PIMCO. And in addition to being in the Global Compact, you're a signatory of PRI, and you've been very helpful in the development of the SDG Bond roadmap that we just released. Denise, over to you.
Thank you, Lila. It's okay?
I think your mic does.
Yep. Thank you, Lila. Thank you all for coming. Very nice panel before. Thanks for Global Compact to invited me to share my experience in these guys and this girl here talking about the SDG. The possibility of impact regarding issues like reporting, metrics, opportunities. And I'd like to start with a 5-minute introduction for all of you regarding issues of our experience using SDG as a framework for your work, for your thoughts about impact, and regarding innovative ways to approach impact, innovation, and how about it's important to scale up this strategy for the business side and the investor side. I'd like to start with you, Saori.
Thank you very much. So, first of all, I would really like to thank Global Compact because it has been quite an inspiration for a lot of companies to think deeper in various issues that we all have a contribution with. Let me start in explaining 3 elements that we see are fundamentally changing and why we have started 4 years ago to think much more deeply about how to monitorize the impact that we truly have. So the first thing that is dramatically changing is 4 years ago, after the financial crisis, long time ago, we were thinking, what's the next wave actually that will fuel growth? And when you look at many companies, there is a tectonic shift. While during the last decades we were actually growing via volume growth and globalization, we could see that in many industries we are there by now. We are in China, we are everywhere in the different countries, and we saw the curve of volume growth still continuing. It will continue because population will grow. However, there's a fundamental tectonic shift that we observe, and that is the next wave of growth based on resources and resource scarcity and how we use them more smartly. Actually, the digital age at Airbnb and Uber have shown us what shared economy really means. So this is one fundamental shift why we were thinking, is the steering of how we do business still good enough? And why do I say that? When you look at the second factor, which is digitalization, it drives many exponential curves. Be it the number of data that is out there, be it the number of, CO2 emissions that is linked to all kinds of production advantages that we have over time. So when you think about the tools that we are all using for granted by steering companies, they all have been invented in the early 1900s. Budget process, target agreement, many of those. And you know what? We were thinking, is that good enough to steer exponential curves? And is it good enough for a mindset that goes on resource scarcity and usage of it? And the third element I would like to give is, we talked a little bit about regulation in the other forums. For me, the most powerful instrument to drive business growth is incentivization. And if you think about trillions of money today going into the stock markets, going into things like gold and other treasures, it doesn't move anything for the society. So we were thinking, as a company that since 150 years does a lot of things in the area of CSR, there is no incentivization of companies to think that way. So that was the foundation of why we invented what we call value to society, which was inspired by the SDG goals. And in this reporting, since 4 years now, we are structuring data that we have across not only profit data for suppliers, BASF, and also our customers. We also looked at the societal impact that we have monitorized and also at the environmental footprint, and that's linked to all the SDG goals. So what I can tell you and our experiences during the last 4 years is the data around, profit is of course very robust. We all know how to do that. The environmental data quality, maybe 40 years experience. The most challenging part is certainly the social part, where we have roughly maybe 10 years experience. And it's interesting because recently when I talked to the EU Commission, it became very apparent that we even have to think beyond what we originally forecasted. It's not only human capital, it's not only incentives for training and so on. Increasingly, it's also about governance and how do we stabilize whole systems. Because companies have to be aware we are more than just a profit contributor. We are an essential part of how to structure also welfare in societies. And I think it's time to live up to that purpose.
Thank you, Sori. Thank you very much. It's a very interesting approach, using SDG as a framework to reporting and to guide the decisions through the company, which is quite new and innovative. Mm-hmm. Thank you for your contribution. I'd like to move first for you, Emmanuel, from Danone, just because I'd like to give a question in the end of the side of the investors to Scott. As Danone has a long journey in sustainability in many, many aspects, are dealing with value chain and impact for a long journey. They have practical commitments regarding this. I'd like to see you talking about the importance, as I already said, of reporting for SDGs, and if you could bring us some insights about the practical guide that we launched, if you have it, to inspire people and to say, for leaders like here, how could things like that could change the way that you approach businesses? Easy question.
Yes, thank you, Denise. Danone is a company that's quite action-oriented, and I have to say, not so much reporting-oriented. So definitely the point about reporting on this so important topic was both a challenge and I think a necessity for us. Exactly a year ago, this room looked a little bit different. We were sitting there, and I shared, responding to a question, the fact that as a company that's on a B Corp journey, and we are a public benefit corporation in this country, the largest, as you said, in the world. We had thought about the fact that the SDGs could form a platform that would allow us to fully integrate what we do into something that would be meaningful, relevant, integrated. And so I shared that in the coming months, Danone would actually announce its framework of 2030 goals that would be related to the SDGs. This is what we did at the last AGM of our shareholders in Paris, where we announced the fact that we're pursuing 9 integrated goals. They are all structured within the SDG framework, classified with what is main focus for us, what is commitment, and what is contribution, so that we can classify the priorities and the way our managers are going to deal with these SDGs. The first thing that we did is that